So, this is another issue of Golden Way business news. Gold bulls succeeded in grabbing the $1,810 resistance as demand for safe haven assets rose after the dollar fell, following data which showed a significant slowdown in U.S. GDP growth in the third quarter. Accordingly, the US dollar index fell to 93.28 and the price of gold is stabilizing around the level of $1,795 as of this writing, waiting for any news. Silver futures closed lower at $24.120 an ounce, while copper futures settled at $4.4385 a pound. A report from the Commerce Department showed a significant slowdown in the price of U.S. economic growth in the third quarter. The report said real GDP rose 2% in the third quarter after jumping 6.7% in the second quarter. Economists expected the pace of GDP growth to slow to 2.7%. Meanwhile, data from the Labor Department showed U.S. initial jobless claims fell for the fourth consecutive week in the week ending October the 23rd, falling to 281.0, a decrease of 10,000 from the previous week's revised figure of 291,000 claims. Investors also reacted to the policy decisions of central banks. The Bank of Canada on Wednesday ended quantitative easing earlier than expected and suggested the possibility of a rate hike in the middle quarters of 2022. The Bank of Japan maintained its massive monetary stimulus and lowered real GDP growth and consumer inflation expectations. Meanwhile, the European Central Bank left key interest rates and future guidance on asset purchases unchanged, in line with expectations amid fears of rising inflation. The bank reiterated that policymakers expect key interest rates to remain at current or low levels until it sees inflation reach 2%, long before the end of its forecast horizon, and permanently for the rest of the forecast horizon. Technical analysis. Stability above the psychological resistance of $1,800 will increase chances of buying and thus push the price of gold to stronger upward levels, the closest of which are currently $1,819, $1,827, and $1,845. On the other hand, these expectations may be threatened if the price of gold moves to the support levels of $1,775 and $1,760. If this happens, it will be a new opportunity for a return to buying. Gold will be affected today by the strength of the US dollar and the reaction to the announcement of a package of economic data at the end of a trading this week. Gold outlook for November. Speculative price range for gold is $1,735.0 to $1,856.0. Gold has certainly seen a slight incremental upwards move to the past month, but it has not been able to build a significant amount of confidence with bullish speculators. Many traders will want to see a sustained amount of value above the 1,810.0 juncture and the 1,825.0 mark to be surpassed before they are willing to proclaim a bull market may be underway. If support levels continue to be challenged with reversal lower, the precious metal could remain a speculative hunting. The 1,770.0 level needs to be sustained for gold because if it is broken again, near term, this precious metal could quickly see moves lower which could bring the 1759.0 ratio into sight, which was tested on the 17th of October. If gold were to stumble below this mark, the 1748.0 level looks like a place where durable support could prove adequate and spring a rallying cry from traders who may believe the commodity has been oversold. However, if gold is able to maintain a price above 1780.0 as November opens, it could deliver some confidence to speculative bulls. Gold has the capability of moving fast, and if the 1790.0 mark is challenged near-term, traders may again aim for 1800. While this level may be viewed as a psychological juncture by many, the 1800 level has proven to be a mere caution sign for traders, and when surpassed in recent trading, it has not been able to be sustained. Gold will have to move above 1800 and prove it can sustain its price above for a solid amount of time before traders proclaim the choppy conditions within the commodity are over. While long-term traders may feel confident about gold for good reason, short and mid-term traders should understand the commodity can exhibit choppy results. Golden Way: think different, earn different.